This is a beautiful kind of a meeting. After a long time, I'm seeing some beautiful faces here. So it's like, for me, it feels like nostalgia seeing some of your faces. So thank you, thank you, thank you for all of you joined me here today. So it's going to be a fun presentation that's going to happen. Hello, Naina. So nice to see you. Wow. I'm super thrilled. Thank you all for showing up. You really mean a lot to me. And what more fun can we all have? Okay, as you can see, I have lots of fun colors on screen today. That's the energy of this particular presentation. So this is 4 steps to always having money in your bank account. So when I read this book, so this is basically a free taster class based on the book called Profit First. For the first time, I saw or got this book when I was about at least 8 years back. And I was doing e-commerce business back then. And everything that this book had in it was like a mind-blowing thing for me. It was like, wow, had I known it, I would have made so much more profits in my business, was my kind of reaction when I read this book. And then diligently I implemented everything in this book. It's a new financial system altogether that this particular book teaches us. So I put the systems in place, and I was just 25 years old back then. And at that age, I was able to create a 6-figure business and make, so my numbers were like, so the e-commerce business usually has very high expenses, and the profit will be just maybe 10% or 15% is kind of the normal average industry profits. But by implementing the system, I was able to run a business with $100,000 revenue and a $40,000 profit that I made in my first year of business. So it was like, wow, anybody whom I said that I'm running a 40% profitable business, an e-commerce business, they were like, wow, how are you doing it? And the reason for that was this system from this particular book that I put in place. But after some years, I kind of sold the business again for a profit. And then that's when I switched into this profession that I'm in right now, the holistic healing world. But after I started this business, I kind of forgot about it. It was, kind of 8-year time frame, and I did not implement this. But recently, this book came up to me once again, because now my revenue from the business is big enough for me to create more profits, so to speak. And then now it was feeling like this is the 11th hour for me to go ahead and implement this new financial system once again in my life. And at this point, I have multiple businesses. I have something, a farm business, which is a totally physical business. I have my online healing business, or access consciousness business, in other words. I have a school that I'm running. I have a web directory called zeropointhealing.com. So I'm kind of managing multiple different things. And it kind of, right now, it felt like, okay, this is the 11th hour. I have to get my finances fixed if I want to kind of increase my revenue and my profits. Okay, so that's the reason this book has come up. And this is exactly what I'm going to do. Usually once a month, I do a money consciousness or an unlimited money retreat. A retreat is a 2 full-day thing, and it's more like a financial retreat. So what we do in the retreat, I have 10 members who have kind of an annual subscription who do all the retreats with me. And then it is also, these retreats are open for outside members to kind of join in, just one off if they would like. That's why this is also an invitation for you, if at all this interests you. But what we do in this 2-day retreat, it's 8 hours per day, full day, Saturday and Sunday, 8 hours, and then there is little breaks, 30-minute breaks here and there. During the retreat, we sit down, we pull up your bank account, you download your financial statement, we categorize the numbers, we do the entire kind of an accounting process here. to look at your financial report. You will be doing it on your screen from your end. I will be doing it from my screen, my financial report. So I'll be showing you the entire process of how I create my financial report, my assets, my income, my expenses, my liabilities, and all of those that goes into the financial report. So you will be doing it live during the retreat. And once we have done that, there is an analysis process where I kind of go through the numbers in your kind of Excel sheet that we kind of do it in, and see where your numbers stand, and then what kind of progress and changes can you make in the upcoming month. And then we also have a book that we kind of refer to. Last month, it was Rich Dad Poor Dad book that we went into implementing the systems in that book. This month, it is this Profit First book where we learn this new system. So I would be doing the presentation of the entire book through the retreat, and you will be learning it, and you will be also starting to implement the systems. So it's like this financial retreat. It's not just sit and listen, it's like, let's do it. So that's how the retreats are usually. What you're going to see today from me right now in this class is just 2 pages of this book, which is going to be of huge value to you in this particular call. Let's begin. What is your profit? So when I say profit, I kind of mean everything that is left out after your expenses. So I know all of you in this call might be doing some kind of business, or in some cases, you might be doing a job and receiving income. In that case, in your personal life, you can consider it as, okay, I have this much income, I have this much expense. Whatever is left over after the expenses is what I call as profit, just for simplicity's sake here. If you're running business, obviously you know what is profit. All your entire business income minus your entire business expenses is your profit. So then we need to know the numbers. How much is your total monthly income? How much is your total monthly expenses? And then how much is your leftover profit per month? I hope some of you would know the numbers and some of you might not. That's completely fine. But usually 80% of cases that I've seen is like, I have $1,000 income and all of that goes in expenses. So usually at the end of the month, there isn't anything left over. So it feels like, okay, $1,000 income, $1,000 expenses, $0 profit. You know, that's how most of us live our life. And especially in my case, that's what usually happens. So then, are we truly making any profits in our life? Is the question that we would have to start with. Okay, so then you might be asking, okay, how can I then have some profits that I can start building my assets, right? So any profits that you have, you can start investing into assets and then start building your assets so that you have long-term wealth. There are 4 core principles that this book teaches us in order to kind of have profits. And for me to kind of explain this, I might have to go through an analogy that this particular book. So everything that you're seeing in the slide is coming, the content is directly coming from the book Profit First. Let's take a moment to talk dietary science. No groans, please. This stuff is fascinating. In 2012, a report in the Journal of Consumer Research concluded that average plate size, right, the eating plate size in America had grown 23% between the years of 1900 and 2012. That's about 9.6-inch eating plate grown to 11.8 inches. Running the math, the article explains that should this increase in plate size encourage an individual to consume just 50 more calories per day, that each person would put an extra 5 pounds of weight each year. So what they were discovering from this research was when your plate size is increasing, it is also contributing to increase in weight overall. So I'm going to use our food behavior as an analogy here and then come back into our money behavior, because both of it, there is a connection. So no wonders when I'm going into the food stuff in the next slide. But using smaller plates is just one factor. There is more to a healthy diet, and it is based on 4 core principles of weight loss and nutrition. The first step, if if you're looking to weight loss, is using small plates. Using smaller plates starts a chain reaction. When you use a small plate, you get smaller portions, which means you take fewer calories. When you take in fewer calories, then you would normally start to lose weight. So that's the first principle. The second step is to serve sequentially. If you eat vegetables rich in nutrients, vitamins first, they will start satisfying your hunger. When you move on to the next course, your mac and cheese or smashed potatoes or whatever it is, you will automatically eat less. By changing the sequence of your meals, by eating your vegetables first, you automatically bring a nutritional balance to your diet. So that is the second principle. The third one is to remove temptation. Remove any temptation from where you eat. People are driven by convenience. If you are anything like me here refers to the author of the book, where there is a bag of Doritos sitting in your kitchen, it calls out to you constantly, even when you are not hungry. If you don't have any junk food in the house, you are probably not going to run out to a store to get it. You are going to eat the healthy food that you have stocked. So that's the third principle, to remove temptation out. Fourth principle here is to enforce a rhythm. If you wait until you are hungry to eat, it is already too late and you will binge. Then you are likely to eat too much and stuff yourself. You go from starving to stuffed and back to starving again. These peaks and valleys of your hunger result in way too much calorie consumption. Instead, eat regularly. Many researchers suggest 5 small meals a day so that you never get hungry. Without the peaks and valleys, you will actually eat fewer calories. Okay, so all of you might be wondering, well, this is a financial call. Why are we talking about food here? As I said, all of these 4 principles that is coming from our food behavior is going to apply exactly into our financial behavior as well. So I guess this analogy helped you to get a picture. So first is to if you want to lose weight, start using small plates and then start serving sequentially. Eat your vegetables first so that the rest can come in later. Eat the nutritious food first, right? And the third one here was to what? Remove temptation, right? So remove temptation by removing any junk food that you're storing in house. And then the fourth was to enforce a rhythm. Start eating more meals a day more frequently so that you never get too much hungry. Okay, by now I guess all of you know those 4 principles. How do we apply that into our financial life? The formula that we usually apply in our financial life, the old accounting formula, is sales minus expenses equals profit. Get as much income as possible and then pay all your bills and do all your expenses. Whatever left over is profit. If there is no profit, what should we do? Increase sales. If we increase sales, then what is happening? The expenses are increasing as well, giving us no profits anyways. Something is wrong. What is that? Okay, the new accounting formula is sales minus profit equals expenses. If you would like more profit, then from the sales, you might have to keep your profits aside first. And whatever is left over, maybe that we should use for our expenses. This is what is profit first. In our worlds, whether in our personal life or in our business life, we usually focus on expenses And we also ask the question, how can I reduce my expenses? Is that working? Well, according to law of attraction, what you focus on kind of grows. So if I am focusing on my expenses, I'm like, my expenses is too high. How do I reduce it? I'm focusing on expenses, so it's going to increase, right? That's law of attraction in simple words. Whatever I focus on grows. So I keep focusing on my expenses, even though my point of view, my ask here is, I want to reduce expenses, I want to reduce expenses, but I'm still focusing on expenses, so my expenses keeps growing. What if I can focus then on my profit? Instead of asking how to reduce my expenses, what if I can ask how to increase my profits and just focus on profits according to law of attraction? Then maybe my profits can increase. Okay, let's now apply that 4 core principles to our financial life. So the first principle that we learned was to use small plates. What is your plate in your financial life? I guess my plate is my bank account, right? I have one bank account in which I receive all my income and all my expenses goes out of that same plate. And remember human behavior, how much ever I have in my plate, I have the ability to consume. If my plate is small, I would consume less. If my plate is big, I'll consume more because I'm a human being. So if I see that this month my income is more, then I'm gonna expense all of that. If next month my income is less, I'm gonna expense all of that. Okay, then how can I use smaller plates regardless of my income? Here is how you apply the 4 principles. When money comes into your main income account, it simply acts as a serving tray for the other accounts. Oh, so smaller plates, I can have multiple bank accounts, each serving a different purpose. So I am not like, this month I have $10,000 income. The minute I see that income, automatically I have in my mind how I can spend that $10,000 for expenses. You know what? I have been asking for a shift in my office space. This office is so small, so I'm gonna enlarge my office space because I have the money for it now. Automatically, we create expenses when we see that my income is increasing. Instead, when I start using smaller plates for my different purposes, now I know how much I have for my expenses. I'll clear it all for you. So when money comes into my main income account, it simply acts as a serving tray for the other accounts. You then periodically disperse all the money from the income account into different accounts in predetermined percentages. Each of these accounts have a different objective. One is for profit, one is for the owner compensation, or owner compensation, you can just look at it from the perspective of whatever your pay is from your business. Another is for taxes, and another is for operating expenses. Operating expenses here refers to your business expenses. And I personally have kind of implementing this in my personal life as well. So how do I do that? In my personal life, if I have one bank account, I see that this month I'm having more income. All of that gets spent out in my personal expenses. So how do I apply that in my personal life too? I would say, okay, all of the income that I'm receiving from my business, I'm going to put it into different trays. This tray or this account is my profit account. I call it my money magnet account. For those of you who already know Access Consciousness, you will know the 10% account. So the 10% account, I call it my money magnet account because I want to give that money a job. I give my money magnet account, how much ever money there is in that account, I give the job to that money to attract more money into my life. It's not sitting simply there. So when I change my point of view, guess what happens? My reality changes. So when I say, oh, you money magnet account, the $1,000 in this money magnet account, your job is to attract more money into my life. So when I give it that job, it's gonna do its duty. Okay, so I'll continue the rest and then I'll give you more of how I apply it. Collectively, there are, according to the book, there are 5 foundational accounts that the author kind of recommends here. The first account is my income account, and then there is a profit account, and then the owner's compensation, the tax account, and then the operating expenses account, right? So the 5 different accounts here. And these 5 different accounts serving as different trays for me here, small plates. Second, serving sequentially. How do I apply that? Principle of serving sequentially, we learned about eating vegetables first. So what is your vegetable of your business? Profits, right? That's the most nutritionally healthy stuff that we all want from our business. So then how do we apply that? Well, always allocate money based upon the percentages to the accounts first. So I'm going to give you like an visualization here for you to visualize this happening. Imagine I have 5 accounts: income account, profit account, my owner's compensation account, and then I have my taxes account, and then I have the operating expenses account, right? So imagine 5 accounts, 5 bank accounts. Imagine in my income account, I receive all my income. So if this month, if I have $10,000 income from all of my businesses together, imagine that's coming into my income account. From that income account, I'm gonna have, they say, percentage allocation. Oh, how do I allocate percentage? Okay, so let's say I would like at least a 10% profit. So that's my percentage to my profit account. And then there is my owner's compensation account. How much percentage can I put on that? 70% is what is coming up for me now. So let's keep it as 70%. And then there is my taxes account. From my revenue, let's say 10%, I need to kind of save it separately for my taxes so that year end, I don't have any surprises. So 10% goes to my taxes account. My business operating expenses for my healing business and all of the few other businesses, service-oriented businesses, usually have less operating expenses. So imagine 10% in my operating expense. Okay, that looks good. Income, 10% profit, 10% tax, 10% operating expenses, and then 70% goes to my owner compensation, which is my compensation from my business. Let's see what the book says here. Never, ever, ever pay bills first. That's what we usually do. We receive the income, we first pay all our bills. Author says, do not pay the bills, instead do the percentage allocation first. The money moves from income account to your profit account, to the owner's compensation, to the tax, to the operating expenses. So first, whenever the income comes in, you split it up into these smaller plates first. Then, after you split it up, you pay your bills only with what is available in your expenses account. So now, when my income increases, I am not tempted to expense it all out. My process here, my habit here that I am cultivating is to receive the income, divide it by percentage and put it up into those accounts. And then whatever is in my expense account is the only thing that I can spend for my expenses. I hope you get the point. And if there isn't enough money left for expenses, what then? This does not mean that you need to pull from other accounts. What it does mean is that your business is telling you that you cannot afford those expenses and you need to get rid of some of them. That's an invitation for you to reduce your expenses. If your expense percentage of your business is just 10%, then you need to see, okay, why is it that my expenses is more than 10%? For some of you who are running, let's say, what's that thing called, manufacturing kind of businesses, or let's say in my farm business, which has different percentages, because a farm business is based on a lot of physical labor and a lot of physical, what do you call it, material things that we need to buy from month to month. So in that case, I can change my allocation to, let's say, 50% operating expenses. So you can change your percentages to fit your own personal business, however that functions. This can also be applicable to your personal life, and that as well has changed a lot in my life. So let's say I'm going to give you an example of my personal life, how I can implement this. In my personal life, if I see that more income, I'm kind of expensing it out with my shopping behaviors, with my eating behavior, with my expansion behaviors, I can do the same into my personal life as well. I can say every money that I am receiving as income, whether you're receiving it from a job, from your business, from whichever source of income you're receiving it from, you can have one income account, and then you can say, everything that I receive as an income, 10% of it, I'm going to put it separately into my money magnet account. 10% I'm going to keep it for purchasing assets, right? So that you can build your wealth. And that's what we looked at in our previous retreat, for those of you who attended my previous retreat, which was all about building assets and increasing your wealth. So for that purpose, I can have my income account, I can have my money magnet account, 10%. I can have my asset building account of 10%. And then I can say, oh, taxes for my personal life as well. If that is applicable, I can have a 10% tax account. And the remaining 70%, whatever that is, now I can put that into expenses. What if my bills are more than what is in my expense account? I need to reduce my bills. So that's an invitation for me to go ahead and look at my expenses and reduce the expenses as necessary. Okay. Eliminating unnecessary expenses will bring more health to your business than you can ever imagine. Third principle that we learned was removing temptation. Yeah, you know what? I'm a very tempted being. I keep shifting my money from my profit account, from my tax account into my expense account so that I can expense more, because that's the behavior that I grew up with. How do I change that? We learned from our food behavior that, okay, don't keep junk food in your house, right? So, how can I apply that into my financial life? Move your profit account and other tempting accounts out of your arm's reach. Oops, how do I do that? Make it really hard and painful to get to that money, thereby removing the temptation to borrow, that is, steal from yourself. Use an accountability mechanism to prevent access except for the right reason. Okay, so how do you apply that in real life? You might have to keep those accounts in a different bank so that it's difficult for you to move money from that bank to this bank, or open up an account that doesn't allow you to kind of transfer money frequently, right? There is all these different types of savings account that doesn't allow you to transfer money out from that bank account easily. For me, I have my money magnet account in a different bank. It does allow me to transfer, but I guess the more I have practiced this, I am not anymore tempted In fact, from the time I have deposited money into my money magnet account, I have never ever touched the account, because my point of view is behind that is, if I take money out of my money magnet account, it's like my heart of my financial reality. If my heart stops beating, my financial income cannot come in. So that's my interesting point of view. So therefore, I have put interesting points of view in it so that I never touch my money magnet whatsoever. And it has worked out for me amazingly great. From the minute I have started transferring, I named it my money magnet account, and I'm like, even if I die, I'm not going to take money out of this account. Okay, that's my way of implementing and removing temptation from that account. In fact, I don't even know how much money is there in that account. I don't even check my balance. I know there is more than enough in that account. My way. Okay, so then the fourth principle was enforcing a rhythm. Enforcing a rhythm, right? 5 meals a day. How do I put that into my financial life? Well, the author says, do your allocations and payables at least twice a month. It can be something like 10th and 25th of the month. Don't pay only when there is money piled up in the account. Instead, go into a rhythm of allocating your income and paying bills twice a month so that you can see how cash accumulates and where the money really goes. What does that mean? So those of you running business, you know that your money comes in. One day there is less, one day there's more income depositing, and then 1 week is better than the other, 1 month is better than the other. So it's like the cash flow is up and down. So what you can then do for such kind of businesses is allow the money to accumulate from first of the month until the 10th of the month, and then do your transfers on the 10th of the month. See total income deficit for 1 to 10, and then whatever amount. So let's say I have $1,500 deposited for this 10 days of the first 10 days of this month. For that 1,500, 10% of it, $150, I transfer to my profit account. 10%, 150, I put into my tax account. 10% I take and put it into my business expenses account. Remaining 70% of that, I transfer into my owner's compensation, right? So I do that on the 10th, and then I allow money to accumulate from 10th to 25th in my income account, and then I do the transfer of the percentages once again. So that's what enforcing a rhythm. So you don't have to do it daily in the first place. Also, you don't have to do it only when there is a big deficit coming in. Instead, there is a rhythm that you're following that allows you to keep up with that new behavior, new money behavior that you are building. This is a controlled, recurring, and frequent cash flow management, not by the seat of your pants cash management. That's a joke, but not a joke. So, yes, that helps us do this kind of a frequent, recurring cash flow management. And this is also a screenshot from the book where the author has kind of given certain percentages that certain different industries can follow. So for the revenue of until $250,000 of a business, he recommends these percentages, which is profit 5%, owner's compensation 50%, tax 15%, and then operating expenses 30%. But as I have already mentioned, this percentages doesn't actually fit into my personal, let's say my healing business. My online, it's a service oriented business where my operating expenses of the business is Zoom payment, for example, or Calendly payment, these softwares that I'm paying for, which is not more than 10% of my entire income. So therefore, my operating expenses, I wouldn't need it 30%. I can keep it just 10%. And then I can put that extra 20% into my owner's compensation that I can withdraw as my salary from the business. So this is just an example for you to see how that percentages looks like. Okay, I know that's too much for a 30-minute free taster class. So how do you take one step at a time? The easy step that author recommends here is, first of all, okay, one question that I want to ask you here would be, if you do implement this system for 1 year from now, what would your personal life finances and your business finances look like 1 year from today? Imagine May 7th of 2022. How does your accounts look like? Well, first of all, you might have made a profit and there might be like $10,000, $15,000 sitting in your profit account. You might have enough money to pay your taxes year end. You might have had a beautiful system in place so you're not consuming too much expenses every month. So at the end of 1 year, most likely you might have a very successful, sustainable business and your financial life, your personal financial life, where every month you have that kind of 10% going into building your asset. And you might be willing and ready to increase that 10% to 20% as well. Yeah, you might be successful. Not that interesting, right? Are we truly willing to be successful? Well, we need to change a lot. Resistance to change would come up. And we are like, why do I even need so many different accounts? I did try my best to not open account and implement this with one bank account. It never ever worked for me. So yes, I did painstakingly open up 3, 4, 5 different accounts in different banks because that helped me to be successful. Yes, so there is a lot of changes you might have to implement in your financial systems, but if you do implement the change, you might be successful. So maybe that's not something you might want. So easy first steps. Trust the process. This works, but it is unfamiliar. I know it. It's unfamiliar. This might be the first time you're even listening to 5 different bank accounts or something of that nature. So you will resist. Commit to, for now, relinquishing your resistance and comfort in doing what you did in the past. It's easy to continue doing everything that you had been doing. It is. You will face those resistance to kind of implement all of this. So first step is then to start trusting the process. Then you can prove it to yourself. Second, for now, just an easy step, if you had been functioning with just one bank account, the easiest first step to do here is to open up just one new account for profit, for simplicity's sake. As I said, I name it Money Magnet. If you kind of felt that would work for you, you can take that as well. Since profit accumulates, you should be able to quickly save in excess of any minimum balance requirements. Yes, I'm aware of all those minimum balance requirements of bank accounts, but the more you start practicing it, you should have enough to avoid any fees in these additional bank accounts. Or better yet, use a bank that does not have a minimum balance requirement. There are, if you start searching for it, no fees accounts, no minimum balance accounts. And I do actually have few no fees accounts, no minimum balance requirements. So whichever country you are in, there are possibilities if you start asking for it. Your goal now is to start immediately and decisively. And the book also recommends, if 10%, taking out 10% into your money magnet account is going to be difficult for you, then start with just 1%. If you're getting $10,000 deficit, just go for $100, which is not going to impact too much, so that you can start that habit in the first place. Transfer just 1% of your current money into your profit account. That you have seeded the account, and don't touch it, never transfer it, let it just sit for now. What's the most important here is to build that habit and build your focus on to the profits. Okay, so that's my beautiful gift for you here. And if you want more of that, the book is so huge. What you saw today is just 2 pages from the book. So I have kind of taken the best content out of the book to give it as a gift for you. And those of you who would like to come in for the session, for the retreat, it's like a 2-day retreat, as I said. You can kind of send me a message. All of you here are in my friends list. So send me a message and I'll give you more details about that. What else is possible? Any questions on any of those, my dear beautiful beings? Wow, look at your faces. I love seeing all of you here. Any questions? Hello, Diana. How are you? Wow, finally I got to see you, dear.
Hi, it's very early morning for me, so good morning.
Ah, right. Good morning. Yes. Beautiful. Any questions at all for today?
Hello.
Yes, Neha.
Yeah, I have a question. Like, I am like putting my 10% to a different bank account,
Hmm.
and someday I had a issue. Then I had to borrow from that, and then I quickly repay that amount. So is that okay? Like, I am maintaining from 6 months, but I'm not seeing any good results, like in terms of finances increasing or anything. And what to do with that 10% account? Just we need to have that money, not to spend anywhere.
Right. So I'm sensing, what is your point of view about that 10% account?
I thought that after 6 months, my financial reality will change
Mhm.
after putting that 10% account. But
Right.
I have faced a lot of difficulties, and now when I am able to say that, okay, from last 6 to 8 months, I'm doing that 10%, I'm not seeing any changes.
Right. So I guess it goes back into the point of view that you have about that account. Just like how I said, I have a point of view that that is my money magnet account. And I also name the account as money magnet and I kind of give it the duty. Let's say there is $100 in that account. I tell my dear $100, your job, your duty is to help me receive more money, right? So I kind of give it the duty. And if you have come for my this book facilitation, which is Love Money book, it kind of teaches you how you can talk to money, because money is a being with consciousness that you can actually talk to. In other words, it's an entity with consciousness, so you can talk to money and you can tell it, okay, this is your duty, keep pulling more money for me. And having lots of gratitude towards it can help with kind of the words that you said. The energy that I'm feeling is how much more gratitude you can put to it, to the money that you have, that can help you totally shift and change this energetic vibration of it's not serving me point of view. What if it can serve you if you kind of change your point of view, is what is coming up for me right now.
Yeah,
Yeah.
actually, I'm very grateful that I am, whenever I think about my money, I just see the number 888 So that's really exciting.
Wow.
That's nice.
Beautiful. Yeah, just try, that consciously giving it the job for it, giving it the duty, and kind of talking to it, and then telling and kind of having your point of view. This is my money magnet. It magnetizes more money to me. Is going to help you. Is what I'm getting here.
Yeah,
Any,
I will start talking to them. Thank
sure.
you.
Wow. Beautiful. Thank you, Neha. Anybody else? Anything else for now? Seeing your names
I
just
find it
excites.
very interesting.
Diana, yes.
I find it very interesting these strategies you shared because actually I was starting to do the reverse because I had before different accounts open and it just seemed to be didn't make sense to me in the way I was thinking because it's just they charge you fees, and so if you have money in there they will just drain until you have nothing. And so I decided to close it and maybe just keep one. But with your strategies, it makes it makes sense to have more open. But yeah, it's kind of like finding ones that have no fees and stuff like that. That might be difficult.
Yeah, it's just an interesting point of view that's coming up. But what if it is possible? What, as I said, I personally have no fees accounts. And from the time that I have personally started, let's say, allocating at least that 10% as my money magnet, that has served me so much. It has, from I started that, my, checking until then, I had this huge up and down curve with money. So money comes to me and then I spend it all, and then there would be no money to pay the bill, and I'll be stressed that tomorrow I have this huge bill coming in, and tonight I'll be doing something to manifest money. So that was my pattern, and that pattern continued for years. And then finally I was like, okay, I have to change this pattern of up and down finances. And that's when I got into, access consciousness, learning all of these new systems and different books that gave me all of this. And I instituted the money magnet, and it was such a surprise for me. Even the first $10 I transferred into the account, from that point I'm still magically wondered how come that can, like that, shift and change my money patterns. From then it has never been that pattern. I'm never seeing back again. It's like always there is money coming in and kind of serving me. There is that kind of more than enough pattern started off when I instituted the money magnet account. So that has been my experience, and I'm kind of wondering how that can happen. But yes, that has helped me.
Thank you.
Yes, and there are possibilities existing regardless of the countries that you are in, with no fees accounts. So just start Googling it and tap into the possibilities of that. Okay.
Thank you.
Thank you, Diana. Beautiful questions there. All right, so I'm going to let you go. I see that we are over time as usual, but doesn't matter. I hope that served you. Thank you, my dear beautiful beings. Anybody want more information on the retreat can kind of...
Thank you so much.
Thank you, Harish. Thank you, Jackie. Thank you, all of you.
Thank
Wow.
you.
Thank you, thank you, thank you.
Really appreciate it.
Lots of
Vishnupriya.
love.
Thank you.
Thank you, Diana. Bye-bye.
Bye-bye.
Bye, Sunil.